Tuesday morning to you. Good morning. Welcome to 55 minutes of current and relevant business talk here on Business Morning. I'm Ini John Mekwa. We start business as usual from our global space where oil gained, well, a reverse of what we had yesterday. It gained more than $1 per barrel on Tuesday, rebounding on technical factors and bargain hunting after that decision by OPEC Plus to boost output sent prices down the previous session, although concerns about the market surplus outlook persist. Now, for this morning, it's much better than what we had yesterday. Yesterday, we had $55 for Brent. So we're seeing in the course of the day all through Monday up till today, we see more than 2% increase on that. And so it's $61.38, while WTI is still around 58. That's about what we had yesterday, but it had gained 2.2%. Both benchmarks settled at their lowest since February in 2021 yesterday, driven by an OPEC Plus decision over the weekend to further speed up oil production hikes for a second consecutive month. Now, today's slight rebound in oil prices appears more technical than fundamental. Persisting headwinds also is a factor there, including a pivotal shift in OPEC Plus production strategy, uncertain demand amid U.S. tariff risk, and price forecast downgrades are continuing to weigh on the broader price movement, driven by expectations that production will exceed consumption. Oil has lost over 10% in 6 straight sessions and dipped over 20% since April, when U.S. President Donald Trump's tariff shocks prompted increased bets on slowdown in the global economy. The return of Chinese market participants after a 5-day public holiday since May 1 was seen as supporting prices on Tuesday, and being the largest importer as buyers would have likely jumped to secure oil at current low levels. Nigeria's private sector continued to grow in April, with the Purchasing Managers Index, that's the PMI, holding steady at 54.2 points, marking the 5 straight months above the 50-point threshold, which signals business expansion. According to Stanbic IBTC Bank PMI report, the rise in business activity was driven by strong customer demand and a surge in new orders. All major sectors expanded, but services led the way. Employment rose for a 5th straight month, and purchasing activity reached a 2-year high. Despite a slight rise in inflation and exchange rate concerns, businesses remain upbeat. However, confidence slipped for the 3rd month as firms are watching global and local risks closely. Electricity distribution companies DISCOs in Nigeria billed customers a total of 496.1 billion naira for electricity supplied in the first 2 months of this year, 2025. And this is according to latest data from the Nigerian Electricity Regulatory Commission. However, only 75% of this amount, that's approximately 372.1 billion naira, was recovered, leaving a significant 25% shortfall in collections. The report highlights a continuing challenge in the power sector, where revenue collection has persistently lagged behind billing. The $124.04 billion shortfall underscores the financial stress facing DISCOs, which rely heavily on payments to meet their operational and market obligations. NERC is expected to engage stakeholders to address this persistent deficit, which threatens to undermine investment and sustainability in the power sector. And there was a big visit to the president. Mr. Dangote made a visit. The president of Dangote Group, Aliko Dangote, is praising President Bola Tinubu for assembling what he describes as a capable leadership team at the NNPC Limited, highlighting the appointment of Mr. Bashiru Bayo Ojulari as the group Chief Executive Officer, and Mr. Ahmadu Musa Kida as non-executive chairman. According to Dangote, the new management team brings a wealth of technical expertise and all have managerial experiences that are essential for revitalizing Nigeria's most strategic public enterprise. Responding to questions from the media after his visit to the president, Alhaji Dangote clarifies that he is still fighting for the survival of his $20 billion refinery and that he is determined to fight the cabals in the oil sector to a standstill. He revealed that the cabals he was referring to are some major oil marketers and traders who were bent on frustrating the efforts of Mr. President in revamping the nation's economy. A bit of corporate now. Guinness Nigeria PLC has marked 75 years of operation in the country. The colorful event, which held at the company's premises in Ikeja, Lagos, was a celebration legacy immersed in heritage, innovation, and its deep-rooted bond with the Nigerian people. Management says that the company will stay focused on delivering quality to its esteemed customers.
Since arriving in Nigeria 75 years ago and the establishment of its first brewery outside of Dublin, Ireland in 1962, Guinness Nigeria PLC has continued to stamp its feet within the nation's industrial landscape. To celebrate this remarkable journey, notables including the company's chairman, Professor Fabian Ajogu, Commissioner for Commerce, Cooperatives, Trade and Investment, Mrs. Folashade Ambrose, and the Director General, Manufacturers Association of Nigeria, are all present. The chairman, in his opening address, says Guinness Nigeria PLC will continue to leverage on partnerships.
On our 75th, we'll be leveraging the partnership of a good understanding of the Nigerian business terrain, a powerful distributorship network, a knowledge of the consumer.
A future that would resonate across generations.
And then a short documentary on the successful journey so far. Management of the organization says the company will stay focused on delivering quality and work with the Nigerian people.
Guinness Nigeria will continue to look for newer opportunities in terms of products, categories that we can enter. And yes, we will be launching new brands in the course of time.
We've come a long way, but there's so much to do. It's a brilliant legacy, but most importantly, a bright future for Guinness.
Since inception, more than 7 decades ago, Guinness Nigeria PLC has played a pivotal role in the Nigerian manufacturing sector and a shining example of what the country's economy holds.
In terms of investment, in terms of commerce, in terms of trade, and in terms of actually growing our economy, they played a pivotal role.
Guinness at 75 offers a shining example of the promise that the Nigerian economy holds.
For the company's top distributor, Guinness Nigeria ensures a win-win atmosphere for all.
It's a relationship that has been very beneficial to both parties. So just as I said, Guinness they don't just do business with you, they build you, both your capacity and capability.
The chairman and managing director are joined by the special guest to perform this important task of cutting of the anniversary cake. As Guinness Nigeria PLC celebrates 75 years of operation, the management, staff and partners are poised to continue working together, take the company to even greater heights by building on enduring legacies and existing structures.
And now let's discuss something that seems to be a burning issue. A lot of bank customers are seem not to be happy with some banks at this time. Let's find out Are you afraid of your fund? Is your fund secured? Are you happy with treatment given to you by banks in Nigeria? And we have the national president of the Association of Senior Staff of Banks, Insurance and Financial Institutions right here in the studio, Mr. Olushoji Oluwole. Mr. Oluwole, good morning and welcome to the program.
Good morning, Nene. Thank you for having me.
Yeah, so some bank stocks weren't doing well yesterday, and one would just wonder, are customers really not happy? There was a protest by some youths, and you know what's going on around the banks and all of that. And sometimes you just want to ask if the banks are communicating enough with their customers, whether at times like this when sentiments are not all positive, or at times that seem to be neutral, or times when you hear complaints of reversal or incomplete transactions. Would you say banks are communicating enough with their customers?
Yes, I would say that banks are doing that quite often. Banks usually send out messages to their customers, advising them on how to secure their accounts, especially at this time where a lot of electronic transactions are going on. Of course, we know how vulnerable people can be in this era of digitization. So banks actually communicate a lot. And beyond safeguarding funds, banks also communicate where they notice one or two things that may be off relating to a particular transaction, or where the banks themselves have issues. They communicate as well, because it's one of the requirements from the regulator that whenever there's a downtime, whenever there's an issue, banks should communicate. I personally know that I receive messages telling me that there'll be some kind of downtime, or there are issues, routine maintenance and all those things. They tell you the time frame, and if it exceeds that time, they also come back to inform you.
But in the area of, for instance, I feel that my account has been compromised, it doesn't seem like the bank can really help. I have a personal experience. For instance, I sent money twice. I sent money to somebody, a wrong person, and I reached out to my bank to say, oh, this wasn't the wrong person, can you help me? And they just leave you to yourself. And then in some cases where a phone has been stolen or something, it doesn't seem like the banks can help or will help, in such situations.
Yeah, so I'll take the second one first. Banks are only able to know a problem and resolve it if they're informed in a timely manner. So basically, once there's a complaint, like the example you gave, a stolen phone, or you feel that your details have been compromised, you notify them. Of course, they will ask questions to ensure that they're actually dealing with the right person. And once that happens, the banks immediately place restrictions on that account. That is what is expected, and that is what usually happens to be able to safeguard those customers. But if they do not have information, there is no way that they will know that there has been some kind of...
Because the fund was moved from one bank account to another. They cannot help in that, because they also have, we have BVNs and all kinds of security.
Yeah, so in terms of that, yes, they go on trying to follow the money.
Do they really? It doesn't look like they do.
Oh, yes, we do actually. So in the case of fraud, immediately once your own bank is notified, they notify the other bank. But the experience that we've had is that these fraudsters usually, within minutes, they move from bank A to bank B, from bank B to bank C. It goes on and on and on. It's almost like a vicious circle. But as much as possible, the banks are able to recover what it is that they can recover. Now, taking it back to the first one that you mentioned, where you do a wrong transfer. Yes, once your bank is notified, they notify the other bank. But then there are also processes to it, because it is your word against the other customer's word. You have transferred money. Yes, you may have transferred wrongly. The other customer needs to be notified, because that person has to give consent before fund is sent back. And that is on the condition that the person has not utilized the fund. If the person has utilized the fund, then another journey starts from there trying to get that person to refund. You know, sometimes it's a tedious process, even for the banks, getting the customer to return fund and getting it back. But in cases where the other person clearly admits that the fund does not belong to them, then they do send the money back. Now, the regulators have also understood those challenges, and that's where the BVN thing comes in, because BVN has helped a lot. Where it has been established that that person, that customer who received the fund, either erroneously or took it fraudulently, once it is established, there is a process of watchlisting the person's BVN. And once you watchlist the person's BVN, it simply means that the person cannot operate a bank account anywhere in Nigeria. If you have accounts anywhere, they will be restricted. If you want to open an account, you will not be able to open an account. And of course, you know, you cannot have more than one BVN because your BVN is tied to your biometrics and other data that are personal to you.
So what about these talks of people's accounts being compromised, being used, you know, without the notification or attention of the owners? How true is it?
Yes, it does happen. The question is, how did they happen? And, you know, I spoke earlier on about this era of digitization. We find out that a lot of people actually get compromised without them knowing. Some out of ignorance, some out of greed. The system has put in minimum requirements for security. So the three basic ones are who you are, what you know, and what you have. So who you are is your name. Basically, the username. It could be your full name, it could be your account number. Anybody can know that. The second is what you know. It's your password. Nobody else knows it. You're not supposed to share it. The third is what you have, which is like a one-time password or a PIN that comes from a device that is held by you and no other person. Right. But what we have found is that a lot of people, like I said, out of ignorance, probably, you know, you go to social media, you see something is being sold at a ridiculously cheap price and all that, and then you go on, you click on the link, and it keeps asking you for your card number, asks you for this, asks you for that. In the process of putting in that information, you feel you are doing a genuine transaction, but what you're actually doing is that you are pushing your information to a third party at the back end, who is simply taking it. And while you think you are doing that transaction, they're actually moving your funds out of there. Again, I spoke about greed. There are people who are told that they have won a lottery somewhere. And this is something that has happened over the decades. It's not something new. I've had that experience of somebody calling that we were delaying him from getting a cash prize that had been given to him by a certain telco. And my immediate question to him was, do you use that line? Because I saw the line he used to call me. It definitely was not that telco. He said, no, he doesn't have line. I said, so why would that company give you money that you didn't work for? Well, he found it difficult to understand that bit of it. And immediately, actually went back and said, the card should be blacklisted. Because if that card is not blacklisted and something happens, that customer comes back to the bank and says that we took his money. So we continue to educate customers on securing themselves, on knowing genuine sites, on being careful when they're invited by people that they do not know to give information. Also, we find a lot of people, you know, when you hear that phones are stolen, bags are stolen and all that stuff, phones are not secure, you open diaries inside the bags, and you find all the details of that person written out there, probably because they feel that they may forget. But what they've invariably done is that they have put their personal details out there in public forum. Of course, they are the ones who also use they use details that can easily be guessed. Birth years, birth dates, some even just use 0000, you know, and those are the things that people will test first to see if they can actually be compromised. Because truth is that using an OTP or a password, for instance, or a PIN, you have 1,000 different PINs that you can use. So why go using something that anybody can guess?
So that you remember easily.
Exactly.
Well, what about, how do you react to this notion that sometimes even the bank staff are compromised and are involved in some of this, compromised transactions that lead to loss of funds?
It's not impossible. They exist. Just like you will find in any environment, any business environment, there will always be that one or two people who, either due to pressure or due to preconceived notions, go in there and carry out nefarious activities against the customers. But we cannot use those ones to judge an entire industry. Like I said, in every industry, you will always find one or two of them like that. Organizations go through stringent measures in the process of employing, in checking backgrounds and all those things. But there's still a limit to what you can get. Like for somebody who is under pressure, the person may have come into the institution without any thought of committing any kind of fraud, but falls under pressure, rent, family, friends, peer pressure, and all those things. Or may have been induced by something that looks very, very attractive. So yes, they do occur. And in such cases, organizations do not waste time once they're able to get them, because all these things also have audit trails. And investigations really, really go on in getting them. And once they are gotten, they are arrested, they are prosecuted. And we found cases where a lot of them have been jailed. And not only have they been jailed, they are dismissed and they are blacklisted, so they can never ever work in a financial institution.
What's the process for a customer who feels that their accounts were compromised? Maybe it's through no fault of theirs. What's the process to...
Well, every institution is expected to have a customer care line, a customer care center that runs 24 hours a day, every day of the year. So you could either send an email, you could do a phone call. There are various means of getting to them, or you walk into a branch and it is taken on from there.
There's also the CBN routes. I know there was a time.
So you need to exhaust the bank side, and where you feel that you have not gotten the kind of response that you require, or where there has not been any response within a particular number of days, then you can now take it to the CBN Consumer Protection Unit.
So you talked about the purchasing online. That's becoming really common now. What are some of the tips you could give, to look out for, to protect your card, your fund, when purchasing online?
Yeah, the first really is that outside the very common ones that we know, the common sites that we usually shop in and we already have saved, if you are being introduced...
But sometimes those sites could be cloned.
Yeah.
So you also have to...
Yeah, that's why I said that you already have saved. So you know that you've shopped there, and you are just going there to what you have saved. The first is to check on the top of where you type in the address, the URL, is to see that at the point of payment, the site is secured. So when we talk about security, at the beginning, a lot of times what you will just see is HTTP. Seeing HTTP is not a secure site, but where you find HTTPS, and usually beside it, you are going to find the image of a locked padlock beside it. Once that padlock is open, it simply means that that site is not secure. The second is that if you have received an invitation by mail, one of the things to do is to click on the name of the sender of that name to see that there is no other name embedded behind it. So I'll give an example. Someone received an email, supposedly, from a particular bank, right? Telling the person that, oh, we know that you have applied for this. To complete it, click on this. And the person went on and clicked. And everything that a bank will normally ask for was there. So the person continued to fill. Then he got to the point of asking for card number. He put in his card number. And then the next thing was card expiry date. And that was when the person went cautious and then went back there and clicked on the name on the sender. at that time, it was showing the name of the bank, and clicked on it and found another name behind it. Because today, if you set up an email address, you could set it in such a way that the sender's name could be a nickname, it could be a pseudonym, it could be anything rather than your name. But behind it, the original owner of that account will show. And that was how that person found out that it was actually being defrauded. Now, what had happened was that those fraudsters would have sent out multiple of those mails, knowing that at least one or two people would actually have requested for that service, and they would have fallen victim to that. But a lot of people do not know, and that's why banks keep on sending messages that we will never ask you for your personal details. We will never ask you to send this. All we will ask you is what your problem is. Worst case scenario, probably your account number, which will not be asked in public space anyway. But that is the worst they will ask, because after that, they will be able to get every other information that is required.
All right, so I guess we have to stay cautious and keep giving all of this information. But just before we let you go, at a time like this, when it does seem like sentiments are not so positive concerning the banks, what should the banks be doing to appease to customers, to win back the love and all of? Because I hear some people are actually, from some banks. What should they be doing?
Well, banks will continue to campaign and sensitize customers. They do that a lot. And in the past, it was just simply using emails and text messages. Today, there are various forms of social media that can be used, and the banks continue to do that regularly. But as staff of banks, we also owe that duty to go around to educate people, because I found myself in different fora where these things come up. It even goes beyond the securing of funds, coming to charges, coming to this, coming to that. And I try as much as possible to sit them down and explain to them, for them to understand each area where they have shown concern. Because what we find a lot of times, the social media trial that goes on without clear understanding. But the second aspect of it is that we also appeal to our customers who understand these processes, to educate those who do not really understand, because it's not just the fight for the institutions themselves. We need to also fight and secure ourselves. Because like I always tell people, fraudsters have their training school. They're in school every day. They are 5-10 steps ahead of everybody. Because the moment you start, they are also thinking. Because what you are going to find is that a lot of people who walk around them are also techie people. They are developers. So they understand the entire process. They've gone to school, they've learned this thing. The only difference is that they've decided to use it the wrong way.
All right, Mr. Olusoji Oluwole, National President of Association of Senior Staff of Banks, Insurance and Financial Institutions. Thank you so much for your time.
Thank you very much, Jenny.
All right, let's take a break now. When we come back, we'll head to the commodity space to stay with us. Back. It's still Business Morning here on Channels Television. We head to the commodity space now, see what's happening, and the first thing we see is the Naira. Well, Naira has been moving not so much away from, what we've come to know it, the new normal, but yesterday in the parallel market, we saw a 0.31% depreciation. In the official market, we also saw a huge, I think about 5 Naira shaved off the value of the Naira yesterday, and that, of course, is worrying for every consumer, because it means that your Naira can buy only less than what it could buy before. Let's get more on this with Teva Kumeka. He's a manager of financial derivatives company, joining us virtually. Hi, Teva. Good morning.
Good morning, Amy. Thank you for having me.
You're welcome. So in the official market yesterday, we saw that the Naira lost 5 Naira. In the parallel market, it was down 0.31%. What can we say? And we had intervention from the CBN yesterday, I think earlier in the day or intraday during lunch or so. What would we see is a major driver of that drop in the Naira yesterday?
Yeah, thank you so much, Ine, for that. Yeah, the Naira remained very unstable and under pressure. What we are seeing is that the demand for dollar is higher than what the supply that we have. If you notice, you see that FPI has dropped from about $600 million to about $500 million. And there's also pressure in the oil market because the oil price has remained very volatile. So forex inflow is not keeping up with demand. So even with the CBN interventions, we continue to see this pressure on the naira and the depreciation that we are observing. So until we were able to level up with what the demand for dollar is with the supply, that pressure will continue to remain so.
And we see crude at very risky or sensitive level. So we see it's gone back to 60 now, 61 this morning, but yesterday it was below 60s. Does this feed into all of this? And of course, it's a threat to government revenue.
Yes, the crude market has been very volatile due to uncertainty, global uncertainty, and domestically we are facing pressures on, well, not meeting up with production. So with U.S. tariff and OPEC, you remember OPEC Plus promise to increase production. So there's going to be an increase in supply of the crude. So if there's increase, then the price will continue to go down. The share in oil supply, global oil supply, OPEC Plus contributes about 40%, while the non-OPEC contributes 60%. So the non-OPEC members have been increasing production, but with the combination of OPEC Plus threatening to also increase their production, the pressure on the price will continue to go down. What we noticed yesterday, the drop in oil price and the swift upturn that increased to $61 today, is that investors wanted to cash in on the low prices, that they increased the demand for the product, which moved the price up. But that is more technical than fundamental, because it is very unstable. If we expect prices to continue, supply to continue to increase, then the price will continue to remain low. What is more important is not what happened in the global space, but domestically, how does this affect us? We know by statistics, we know that forex inflows, oil contributes about 80%, and government revenue about 50%. So if oil price remains volatile and less than what the government benchmark, around $78 or $75, there are going to be pressure on the fiscal, there's going to be pressure on export earnings, and once that pressure continues, then the naira will continue to remain under pressure. At the FDC here, we try to play some scenario and see how will this turn out. It's very frightening. We do about 3 scenarios where we say, if oil price gets to $80 per barrel, what would the fiscal space be like? If oil price gets to 60 and to 50, the more frightening is if oil price gets to $50 per barrel, which is very, very likely, because major economists or analysts are forecasting that level if supply continues to increase. What we are going to see is that there's going to be a fiscal deficit of about over $90 million. If government has shortfall of over $90 million because we cannot low oil prices, then there's also the factor of low production. So it's double jeopardy. We are facing low oil prices and low production domestically. What happens to the fiscal space? We are going to see a likelihood of maybe government reviewing its budgets, because the $54 trillion budget cannot be achieved if oil prices continue to remain low and we cannot meet up with production. So coupled with all these things, governments will try to review the budget. That is number one, review it downwards, number one. Number two is to increase borrowings, which is not good for the private sector, because increasing government borrowings will crowd out private investors. Then number 3 is increasing tax. And we know the issue of, we are already facing crisis. In the consumers are already facing crisis. So increasing tax the more will put more pressure on the consumers, and that might lead to whatever, we don't know what the outcome will be. So as long as oil prices continue to remain low due to supply glut in the global market, and Nigeria does not keep up with domestic production, because as of last month in April, in March, we produced about 1.4 million barrels per day. If we can't keep up with production due to instability in the Niger Delta and low prices, this will put pressure on the fiscal, reduce forex earning, and the Naira will continue to be under pressure. As Naira continues to remain under pressure, there is also inflation impact. We did analysis at the FDC, and we did what we call causation and correlation impact of oil price exchange rate on inflation. And there's high correlation, and the effect is also very high, about 1.3%.
All right, and in this, we saw the PMI from Stanbic IBTC yesterday. What we saw, a slight decline, 54.2 in April from 54.3. I guess that looks close enough. But should we be worried? We see the details there. Business activity increased. That's for the 4th consecutive. And then we saw a sharp rise in new orders. So even though we see this slight decrease, because of the change, which is kind of ignorable, should we be worried, or should we say that at least the real sector will be able to meet up or cover up for this loss in oil revenue?
Yes, and we should not be too worried, because the benchmark for the PMI is about 50 points. So we are operating above 50 points, so which is good. The slight decline should be seen. Is not really a positive thing, but it's not too bad, because we are still in the expansion space. So what is more important is what is business. What are businesses' outlook? What are businesses' expectations, and what are consumers' expectations? Based on the CBN survey, we see that in the next 6 months, there is improvement in business expectations and in consumers' expectations. So if consumers' expectations strengthens and business expectations strengthens, then that means we're going to be seeing new investment. As we see new investment comes in and consumers are very positive, with positive outlook, then economic activities will continue to remain viable. As economic activities remain viable, we increase output, we increase productivity, and we have enough of what we need domestically. Then we'll see stability in the economy, we'll see inflation coming down. So for now, we are still above the 50 benchmark, which is a good thing, but the drop is not really welcoming, but it is not too bad.
Okay, so I mean, it's not all bad, at least. Then yesterday, I wonder if you followed the news to see the cocoa board being approved by the executive in the state, in the country. And then we now saw that cocoa prices are declining. We've talked a whole lot about cocoa and the potential that Nigeria has in this area also, which has largely not been explored. I wonder what your thoughts are about this cocoa board, what difference it will make, especially when we still have the need to boost production and then talk about adding value to cocoa for exports.
Yes, Nigeria is not a top producer of cocoa in West Africa. We have Ivory Coast and one other country, I think Ghana or so. So yes, cocoa is another means of forex inflows into the country. So with the decision of the cocoa board, we are trying to streamline this commodity in such a way that the country benefits better. So the most important thing is value addition. How much value do we add to these products? Are we just exporting the raw cocoa, or we are refining to paste, to chocolate, and stuff like that? So if value is added, then we are insulated from whatever, not completely, but whatever domestic volatility we observe will not have too much of an impact on our economy or a particular sector like the cocoa product. So what we need to do is value addition. We need to add value in terms of turning the raw cocoa into finished products which can be exported at higher value. And we know that adding value means adding employment, because if we export the raw cocoa, we are exporting our employment. So there'll be more pressure on unemployment and stuff like that. So what we need to do in that space is to increase value addition and shield ourselves from domestic volatility in the raw cocoa export space.
All right, so what's happening in the domestic commodity space? Well, what are prices looking like?
Yeah, we've seen, in the month of March, we saw prices stabilized due to, there was Salah in March. There was also Easter, Lenten season in March. So price stabilized a bit in March, but now we are seeing an uptick of prices. Like garri increased by about 8%. We see onion increased by about 11%. Pepper increased by 12%, and tomato remains stable. What we are seeing is we have seasonality effects, and there's also the issue of cobweb theory. That's what we call cobweb theory in economics, where producers place prices on their commodity based on what the price has been in the previous period or what they're experiencing currently. So the agricultural sector in Nigeria remains very volatile because this issue of cycles going season in, season out, and that affects the stability in prices in that market. What we need to do is to invest and develop that sector. Major parts of production that happens in that sector, in major part of the country, is subsistence or the traditional way of farming. So by the time we go into mechanized farming and then adopt farming all season, we will not be talking about whether we have a dry season or a wet season. So we have farming in the dry season by irrigation and stuff like that. So until we stabilize output production in that sector, this issue of cobweb theory, seeing prices going up and down, season in, season out, will continue to play in. But we hope that as we, even the rains, the rains this year are not as fast coming as previous years. But we expect once the rains become steady and farmers are able to go to farm, we're able to see output improving and prices stabilize. But we also need to deal with the issue of insecurity because most farmers cannot go to farm. Those that are able to go to farm cannot even access their farm to harvest whatever they have planted. So until we address these structural issues, and there is issue of infrastructure, moving these things where they are produced to where they are needed for consumption. So until we address the structural issues in the agricultural sector, we'll continue to see short-term volatility in prices based on season and cyclicality.
All right, Teva. Well, it's not new that we need to embrace more mechanized farming to increase production, but we hope we'll see it one of these days. Teva Komeka is the manager with Financial Derivatives Company. Thank you for your time.
Thank you very much for having me.
Let's head to the global space now with Ladi Williams. Ladi?
Yeah, and it's another day, and we're seeing action again, in the global scene, and this time we're seeing intervention. In the intervention in the forex market in Hong Kong. The Hong Kong Central Bank bought about $7.8 billion to defend its currency peg after the Hong Kong dollar hit the upper trading band for the 4th time this month. The HKMA has been active since May 2nd, as the currency repeatedly touched 7.75 per USD, the strong end of its permitted range. The peg system keeps the Hong Kong dollar between about 7.75 and 7.85 against the greenback. Then we see the EU is ready to pull the plug on Russian gas with a new plan stopping fresh deals this year and cutting off all imports by 2027. According to sources familiar with the matter, Brussels will lay out how to ditch Moscow's fossil fuels for good, starting with a proposed ban on new gas contracts by 2025, followed by a full exit from existing deals 2 years later. Then we see DoorDash is buying UK rival Deliveroo in a £2.9 billion all-cash deal. The company's confirmed today, marking the US delivery giant's biggest overseas push. The 180p per share offer, first floated last month, is now locked in with no chance of a higher bid. The deal comes after Deliveroo's rocky rise since its 2021 IPO, with shares halving as pandemic-era demand faded and investors sourced on money-losing gig economy plays. Just months ago, Deliveroo bailed on Hong Kong, selling part of its loss-making OPs there to Foodpanda after the market ate up 5% of its sales, but with zero profits so far. Now, professional services firm PwC is acting about 2% of its American workforce, roughly about 1,500 roles, after getting stuck with too many employees who weren't leaving on their own. According to an FT report, the accounting giant's audit and tax teams are taking the biggest hit. The cuts follow months of musical chairs where PwC tried, shifting staff from slower to busier ones. Some got the bad news this week via an urgent teams invites. Then we see America's services industry notched its 10th straight month of expansion in April. Though analysts say growth is crawling at a snail's pace. The latest ISM services PMI came in at 51.6%, barely above the 50% mark that separates growth from contraction. Fun facts, this marks the 56 growth months out of 59 since the COVID recovery began in mid-2020. But April's reading shows the economy's main engine that might be losing steam. Then we see President Trump, he's taking aim at foreign pharmaceuticals, signing an executive order to speed up domestic drug manufacturing while threatening import tariffs within weeks. The move forces the FDA to fast-track approvals for new pharma plants, directs Environmental Protection Agency to accelerate facility construction, and it comes with a warning shot. New import tariffs expected by month's end, and this marks Trump's latest efforts to reshore drug production after launching trade probes earlier this year. The administration claims it will reduce foreign reliance on foreign supplies, though critics warn it could drive up healthcare costs. That's one of the worries there about most of these tariffs. All right, to other matters now. Remember over the weekend, the Oracle of Omaha, that's Warren Buffett, announced it stepped down, that step aside as Berkshire Hathaway's CEO, paved the way for Greg Abel to be the new CEO. But since the announcement, the share price of Berkshire Hathaway dipped about 5%. Let's talk to a professional here to tell us what's happening. That's Tucker. He's a senior investment professional at TLG Capital. Great to have you on.
How are you? Good morning, Woody.
Good morning. Thank you so much for joining us today. So we're seeing the share price there of Berkshire Hathaway. That's dropped about 5% yesterday. Is this a sign investors are not happy about the leadership change?
Look, I think the stock market's always, I suppose, moving, especially in response to key events. It's actually Warren Buffett's quote himself saying that the stock market is a device to transfer wealth from the impatient to the patient. And so I think the question is, if you believe in the holding company, you believe in capital allocation. I mean, Warren Buffett's philosophy himself changed a lot throughout his life. Charlie Munger was one of the key influences on him. We just need to wait and see how capital is going to be allocated. But it's a fairly simple business. It's about where they allocate capital and the investment philosophy. And if that stays the same, then I anticipate that the stock will continue to perform.
You know, we have a lot of people that love to follow Warren Buffett's principles when it comes to investing. Which one comes to mind, you know, for you?
Look, there are so many principles. He's a fascinating man, right? Because he started out with really distressed investing, right? Taking small, concentrated bets, aggressive bets on businesses. He met Charlie Munger, moved a little bit towards the insurance model, flow premiums, and then, you know, the quotes about, you know, great businesses at fair prices and maybe better than fair businesses at great prices. And I think that's one that sticks with us, right? That it's time in the market, it's about compounding wealth. It's about finding really wonderful businesses, recognizing you may pay up a little bit for them, but letting that come. And I think that long-termism, that element of patient capital is something that we can all think about, right, in times where we think about volatility and short-term returns.
Right, and definitely for me, I think it's sell when the market is greedy and, you know, buy when the market is fearful. I love that one, you know, so much. So what do you think is the future, you know, of the company, you know, after Warren Buffett?
I think the future of Berkshire Hathaway can only be determined by management, but this is a great example of a business where you've had, I think, executives, founder executives that have marked, you know, themselves and stamped themselves onto the philosophy of the company. And we don't see that too much right now in the public markets. We certainly don't see that so much in America, where private capital, private equity, and institutional shareholders have, you know, really changed the character of how executives behave. So I'm holding, you know, my hands up. I'm saying, look, we'll have to see what happens, but I'm keeping my fingers crossed that the investment philosophy of Warren Buffett and the late Charlie Munger can continue to live on through Berkshire and otherwise.
Keep watching out for that. Thank you so much. It was great having you on. Taka is a senior investment professional at TLG Capital. Thank you for joining us today.
Thank you, Laddie. Have a great day. Cheers.
You too. All right, so there you have it. I know you're also a fan, you know, of Warren Buffett. Every, you know, finance person, you know, loves Warren Buffett, and it was great hearing him, you know, speak. You know, over the weekend, he's like 94, and he's still of sound mind.
Yeah,
he knows
still
what's
mind.
happening,
Exactly.
you know,
and
in these markets.
Sharing knowledge. I think one of the biggest things he's done is to motivate. I saw a video of him. He went to school, you know, to speak to the students. So you can imagine the motivation and the impact that will have on the minds of students, and, you know, they want to follow the path. So
right. Hopefully we can have lunch with him one day. Yeah.
Yeah.
Hopefully.
Okay. All right. All right, Laddie, talk to you later. Okay, so while Laddie is praying for that lunch, I join him and say amen very soon. Mr. Buffett, we're going to have lunch with you. Laddie's leading the way. It's not impossible. But the market yesterday, back here in Nigeria, back to reality. The market closed 0.62%, still retaining the 106,000. And yes, the good news from yesterday is that we made some money. So we are back. The market cap is back to the 67 trillion naira level. Let's not see any red again. Okay. Director says it's okay, that we made enough money. We'll see at intraday numbers. That'll be at 1 p.m. Business Incorporated. Laddie will be here. I'll also be here with market numbers, so you don't want to miss the updates from the world of business. That's Business Incorporated. I'm John McQuarrie. Talk to you later.